I'm Charlotte McLeod with investingnews.com, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thank you so much for being here. Great to have you.
Charlotte, always a pleasure. Thank you.
Really good to be catching up with you. And of course, we're speaking during a very exciting time for gold. It's been on quite a run this year, consistently setting new all-time highs. So I wanted to start by taking a look at the big picture and just ask you what macro factors you see driving gold at the moment.
Well, what I find really exciting about the gold market right now, as we're speaking today, and literally over the last couple of months, is that the gold market, this bull gold run really started in the eastern part of the world. It started in China and Southeast Asia and India, and started really with a lot of central banks, but also a lot of investors in that area recognizing that that gold was undervalued and especially for as a store of value and a measure of value. There was a huge push for gold, and so the move in gold really started probably just a bit over a year ago, but it really started in, as I said, China and Southeast Asia, and that was really supported by the fact that the ETFs were down. Even though gold was moving up, the price of gold was going up, the ETFs were down. Well, ETFs are generally a Western investment tool. Equities were down. We didn't see the mining equities, any of the either seniors, mid-tiers, or juniors. They weren't being very well supported. This is all about a year ago to about 6 months ago. And then the other thing I've always said is that silver and gold are very strongly linked, and we hadn't seen any, silver was actually weak on a relative basis compared to gold. So again, this gold rush really started in the eastern part of the world, but I would say that over the last 3 or 4 months, it started moving back into the West. It started flooding into the West, North America and Europe. We're starting to see ETF holdings climbing again. The senior gold equities are starting to get better and better support. We're seeing some good price performance on their side. Mid-tiers and juniors are still a bit weak, but getting stronger, getting a bit more support. And we're starting to see silver move, and so I do really think that what we're looking at now is this rush towards gold as a good strong store of value, a good strong measure of value, a good place to invest, is now becoming a worldwide phenomenon.
Yeah, definitely interesting to look at how it's been developing. And so we're seeing, as you mentioned, interest start to pick up in the West. Are we seeing at the same time interest in the East stay strong?
We have a little bit less central bank buying there, but I would say on the other side of the equation, what we have seen is the bullion demand within China very strong, and I think that China's new middle class, of which a lot of that middle class stores their wealth in real estate. They're very concerned about the Chinese real estate market. And so we have seen very, very strong bullion buying where people, I think, are shifting some of their net worth from real estate in China, which is a pretty attractive. A lot of the middle class in China, that's where their net worth is stored, is in their real estate values. They're starting to see a lot of weakness and be concerned about a lot of weakness in that space. And so bullion buying in the retail space in China has been very, very strong. We're also seeing it elsewhere. Still a lot of central bank interest out there, nowhere near to the extent that it was at one time. China was a lead investor. They've now got up just over 2,000 tons of gold in their central bank reserves. They've got a long ways to go before they can compete with Fort Knox. Fort Knox is up over 8,000 tons of gold. And so, but we know the Chinese would love to compete with Fort Knox. And so, as I've always said, we know there's at least 6,000 tons of demand sitting in the Chinese central bank, and that doesn't count all the other central banks of the world. So there still is strength in the East. It's just I think everything we're seeing in the West is just adding to that strength and momentum in gold.
Right. And from a Western perspective, it seems like everybody over here was really keeping an eye out for the first interest rate cut from the Fed, which we did finally get. So curious to hear a little bit from you about that, what you think the Fed's path forward looks like, and how important you think the Fed is currently for gold with everything else going on in the world.
Well, I don't know if anyone else gets this feeling, but I get the sense that I'm watching one of these high wire acts with a very, very finely balanced, trying to balance increasing debt levels and debt levels that have never been seen before, government spending levels that isn't being supported by revenues on the taxation side. And all that is ultimately going to wind up delivering weakness into the currencies themselves. And so what we're seeing is the Fed and other institutes, the EU, really trying to maintain a very, very delicate balance between controlling inflation, which is a reflection of devaluing currencies, and the fundamentals totally support continued devaluation of currencies. There's not a government in the world that's being fiscally responsible right now, and then trying to balance that with with the obviously the interest rate costs and the impacts that has when we're looking at record debt levels around the world. And so again, the fundamentals support to even more strength in gold.
Right. And I know you're less of a price prediction type of person, but I want to get at least a little bit of a sense of your outlook for gold. It certainly sounds, based on everything that you've been saying, that this is sustainable level. What are your thoughts on gold, the price going forward?
I see continued strength. Again, when I look around, I'm trying to find fundamental weakness. I'm trying to find anything in the marketplace that shows that there will be weakness in the price of gold. I think the variables are all just how much strength, how fast is this strength going to come? What we seem to see on a shorter term basis is gold finding new basements, new floors. I've been in this business long enough to understand what a frothy market looks like. This is still not a frothy market. There's not an abundance of capital in the space. We still are very, very short on the generalist interests. I will say that on my own investor tours, we are starting to get more generalists interested in the space, but it's nowhere near what it was 10, 15 years ago. But we are, as I said, getting more and more generalist interest in the space, and so I still think there's a lot of legs in this run in gold. And in fact, I'm trying to understand what actually stops it, what flattens it. So I wouldn't have any problem envisioning $3,000 gold, not at all, and that's not too far off. I wouldn't surprise me to see that within a couple of years.
A couple of follow-up questions there. So when you're looking and trying to see a bear case for gold or something that could stand in its way, is there anything that stands out to you? It sounds like not really, but anything that you had mentioned that you're kind of looking at?
Well, if the real issue is reserve currencies, and the U.S. dollar for several decades now, maybe close to a century, has been the reference reserve currency around the world. But there is a growing mistrust and concern about the U.S. dollar and its ability to continue acting in that role on a worldwide basis. And one of the key attributes that a reserve currency needs is it needs to be apolitical. It can't be subject to political influence. And that's one of the reasons why we've now seen the BRICS organization come into existence. The only alignment, the only commonality between all the member states of the BRICS organizations is a distrust of the US dollar. And that organization continues to get stronger. There's a number of proposals. The challenge that we have on this planet is what other reserve currency are we going to look at? The EU has, I would say, been a bit of a fiscal nightmare. It again is also a tightrope of balance between an incredibly diverse range of cultures within the EU that all have different expectations in terms of what they can contribute. I don't think the EU or the euro will ever stand as a reference currency. I think every other country in the world, again, the biggest challenge is that political trust that's required to be a good solid reserve currency. Guess what? Gold has been the reserve currency for thousands of years. And that's, I think, what we're looking at. And we see that with the BRICS nations. The latest proposal out of the BRICS nations has a combined currency, a reference currency that's 60% backed by gold, 40% by the member states and their own currencies linked in. That's a recipe for failure. Just looking at those member states within the BRICS organizations to think that they have an alignment in terms of how to fiscally manage a a currency consistently and equally amongst that group. It's just not. That's destined for failure. And so, I do think that as we move towards gold, and I think we in the gold industry also have an obligation in terms of being able to modernize how people can own gold. But in the end, I think gold is the reserve currency, and it's going to move its way back into that space.
I think that makes definitely a lot of sense to me. And if talking about gold, we also have to touch on silver as well. So, as we've been going over, we've got gold at all-time highs, and silver, of course, is on the move this year, but it's nowhere really near close to its all-time highs. So, I'm wondering if you see a stronger breakout for silver in the cards.
Silver is interesting because it is really a Western, the East, just about everywhere else in the world considers it more of an industrial mineral, a high tech electronics mineral, or for jewelry, but not for keepsake jewelry where you store your family's, a portion of your family's wealth in that jewelry. It's as some say it, the affordable precious metal. The one area of the world that really does, on occasion, find silver very attractive is the retail demand within the United States itself. U.S. retail demand for silver has always been sort of a core area that identifies a strong bull market in the silver space. We haven't seen that yet. That's still, we're starting to see some strength. And if you go back and look at every single, strong move in precious metals relative to the US dollar, of course, gold always moves first, but silver lags and then outperforms. And the fundamentals behind silver are much stronger. The industrial demand is higher than it's ever been. We've also hit peak silver production back probably 6 years ago. And so we've had declining worldwide silver production. One of the key things that people should keep in mind is that most silver comes from lead zinc mines. It's a byproduct from lead zinc mines. And we haven't seen a lot of investing into the lead zinc space for a long time. There's not a lot of new operations in that space. Lead and zinc, not very sexy metals. They're not very attractive in today's investing space. Everyone wants copper. Everyone wants lithium. Everyone wants uranium, right? Lead and zinc just hasn't had that attraction. And without new investments in lead and zinc, it's going to have an impact on silver production. So we saw peak silver production several years ago. I think it was about 6 or 7 years ago, and it's been declining ever since. And yet industrial demand continues to grow. Silver is the greenest of all the metals. It conducts electricity more efficiently, more effectively than any other metal, better than copper, better than gold. And so high efficiency electronics, if you want your electric vehicle to last, to travel farther, if you want your electric watch or your smart ring to have a longer battery life or have more processing capacity, add a bit more silver. Silver makes everything better. And so the fundamentals behind silver are a lot stronger. But what we haven't seen is that retail space pick up. Now, we've seen some strength in silver. I think it's kind of ancillary. It's coming along for the ride with gold. I think when it wakes up again, the retail demand, we're going to see silver dramatically outperform. And when you look at the ratio of how silver is relative to gold, there's a lot of space upwards for silver. And so with strong fundamentals, I think it's really only a matter of time until that retail market wakes up in the silver space.
Just because you mentioned silver's industrial side and how important that is, I've heard some commentary that with a recession potentially coming in the US or elsewhere, that could be hurtful for silver's industrial side. So any thoughts on that?
Well, industrial demand is always going to be a function of how busy the economy is. The other side to that is deglobalization. What we're seeing is more and more trade barriers coming up around the world, and that in itself is also going to have an impact on demand, because there's only one person that pays the costs of trade barriers, and that's ultimately the consumer. The consumer has less access to an open, free, competitive market where they can get access to the best priced materials or services all the way through, right? And so there's no doubt that it's going to have an impact across the space in terms of how fast we move down that, because trade barriers, deglobalization always have an impact on that cost. But that being said, I think most of the world recognizes some of the challenges that we have as a society here in terms of the impact we have on this planet. And we have to find a better way, a way to have a lesser footprint on this planet. And silver is going to play a role in that. How fast that happens will be, again, subject to how industrial activity levels and trading activity and purchasing activity will definitely drive how fast that happens, but it will happen. I've always said the strongest human instinct is survival. We will find a way to make this work.
Okay, a little bit of a fun question for the precious metals. So if you had to choose right now the precious metal with the most upside, would it be silver?
Yes.
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 Okay, that's an easy yes. Any follow-up or just that's the answer?
Well, no, it's just because I think silver will ride with gold, and so the worst you'll do is perform equally to gold. But silver has always outperformed. If you go back and look at every strong bull market, silver has always outperformed. It's only a matter of timing. Now, what I caution everyone is that silver is incredibly volatile. One of the challenges that silver has is so much silver is produced as a byproduct from other mines, from base metal mines and from gold mines, which means that silver miners, well, they don't really exist. Only about 25-30% of silver comes from silver miners. So the silver production doesn't have the on-off switch that adapts. And that I think gives silver a higher beta, higher volatility. And so the caution that I tell everyone is that, silver has that higher volatility, which means it's going to outperform on the way up. It's also going to outperform on the way down. If there is a down, it will outperform. And so you have to be a little bit more cautious. Anytime you're chasing beta, anytime you're chasing volatility, you need to be a little bit more cautious about how you invest into it. The biggest challenge, I would say, in the silver space is that it's very tough to find silver investment vehicles, especially if you're looking at the resource space. So many of the silver companies actually produce more gold than they do silver, and sort of keep the silver in the name to try and attract that. But it is one of the challenges: is what's the best way to invest into the silver space.
Really good points. And as we move over now to the precious metals miners, I'm curious about whether they are performing as you would expect in this price environment. In general, are the gold and silver mining companies reaping the benefits of these higher prices? And part of the reason I ask, I know in the previous bull market, they faced some criticism for not taking advantage of these prices, making acquisitions and things like that didn't go over so well. So how are they doing currently?
Well, I mean, there's definitely some lessons that were learned during the last bull cycle, which was, about 10 years ago, a little bit over 10 years ago. In terms of people, I think, adapting to those higher price regimes relatively quickly. It's challenging because, it's exploration success is very tough in today's environment, pushing projects forward into production, which means that when you see prices climb up, and you've got lower grade material around the deposits that you're operating on currently, and that lower grade material at an old price regime was waste. Now, because of the higher precious metal value, becomes ore, becomes profitable, although albeit not as profitable, but it's still profitable, which is all it needs to be defined as ore. And so, the mining industry does suffer from, as I say, it's the tendency of high grade waste to become low grade ore in a high environment. That's one of the huge advantages that the streaming industry has, that we have at Wheaton in terms of what we deliver in our business model, is that our costs are fixed on a per ounce basis. You're not going to get any surprise or any shocks on that. But getting back to the industry, the broader mining industry, there is definitely a bit more discipline in the space. There's a bit, there was some lessons learned, I think, the last time around when we had a rapid uptick in prices and people started making investments based on those, and then we had it fall back through the early 2014, 2015, put a lot of companies under stress. And so there's definitely a much more conservative approach in terms of how to go forward. But the challenge that most of these companies have is that they have flat to declining production profiles going out. They have big holes. They have a lot of mature mines that are getting very, very challenged in terms of showing long-term production capacity or growth. And so, again, going back to how I started this, the biggest challenge is finding and building new mines. It's getting tougher and tougher and tougher to do that in today's planet. And so, that high grade waste, which is now low grade ore, becomes more and more tempting every day, every week, every month, every year. you will eventually see the mining companies have to shift to that lower grade material, which is profitable still at these prices, but they're not going to make as much money on a per ounce basis. Therefore, their cost on a per ounce climbs on a go forward basis, and it's just inevitable. I do think it's going to be much more tempered this time than it was in bull cycles in the past. But it has to happen. Just economics will drive that.
Right. And I think this relates pretty closely to another question I wanted to ask, which is about the juniors right now and challenges that they're facing. It seems like many of them are still having challenges getting funding, moving forward with their projects, which of course we need in order to support those larger companies. So any thoughts on the juniors and when we might see maybe a change in fortunes from them, maybe more interest from the larger companies? Anything on that note?
Well, the biggest challenge is that so much investing has shifted towards index fund. It's not active management of these big funds that are pushing out there. They're just chasing indexes, and the biggest hurdle that the juniors face is that they're nowhere near big enough to sort of qualify for any of those indexes, anything of substance. And so if you don't have active management, how do you uncover those opportunities, those surprising strong projects that have been discovered? And that's the biggest challenge we have in today's world is a real decline in active fund management and people chasing index returns to try and just sort of average everything out. Well, this industry isn't about averaging. It's about finding the jewel in the in the sand, trying to find that one unique asset, that one unique property that can uncover some huge success. And so, I mean, it creates great opportunities for us at Wheaton. We've had great success in terms of providing support to these single asset development companies pushing forward. And by far and away, our capital is by far and away the most attractive source of capital, nowhere near as dilutive as issuing equity into today's world and such. And so it's a continued challenge. We have seen a bit more interest in that space. I mean, here's the best way to sort of bring back that interest is highlight a few successes. And there definitely has been a few successes in the space where companies have transitioned from a project developer into profitable production and then either been acquired and brought into either a mid-tier or a senior producer, or successfully operating and now looking for their second and third stage projects. The more we deliver, the more successes we deliver in that space, the easier it'll be to attract investors back into that space. But the real lack of active fund management out there is discouraging for the junior development companies.
Right, really good points as well. And on that note, I think it would be good to hear a little bit more about Wheaton's strategy in this price environment. Are you looking to do deals right now? Is this not the time for that? Any other elements you would mention in terms of what the company's pursuing at the moment?
Well, we're very active on the deal front. We haven't closed anything of significance this year, but we are pretty close. We've been working on several very exciting projects, and so hoping to announce a couple more before the end of this year. Last year was one of our busiest years ever. We did over 8 transactions with well over $1 billion committed to the space. 8 transactions, $1 billion, $1.1 billion. Those are relatively small deals. Most of them, the average size, $100 to $150 million. I'd sure like to do some bigger ones out there. And what I've seen is that the big capital is usually the base metal projects, especially copper. And we're just not seeing investments into the copper space. We haven't seen good sustained strength in the copper space for a while. Copper seems to bounce its way around the low $4 range, high $4 range. That's not enough to help the juniors, push forward into development on that, or the mid-tiers to develop their projects on a go-forward basis. So they continue exploring, continue doing studies, continue optimization studies, but until the big dollars are going into the ground, there's not going to be opportunities for us to help fund that. However, the gold space with these prices in gold, well over $2,600, got pretty close to $2,700 this morning. Actually, it was pretty exciting there for a while. But with these prices, we're seeing a lot of investing into that space, and so a lot of what we've been doing here lately is gold on gold, gold streams on gold miners, which is not really where we work the best. I personally prefer to try and do precious metal streams on base metal projects. trying to pull some of the byproduct gold out of copper mines of the world. And so that time will come. There's no doubt. But until we see the economic activity pick up to drive the base metal prices a bit higher, we're probably going to see a lot of investing in that space. So most of what we're looking at right now is funding the mid-tier to single asset development companies to help them on their growth profiles, mostly precious metal focused companies.
Okay, thank you for going over that. That makes a lot of sense. And one other thing that I wanted to touch on from the company is the Future of Mining Challenge, which was recently launched, currently accepting submissions. I find initiatives like this really interesting, really good for the sector. So I was just hoping you could talk a little bit about that. What are the goals and what could or what should a company that's looking to make a successful submission be doing?
Well, again, like as we've just been talking about the single asset development companies in the resource development space, what we've seen is a number of technologies out there that are relatively exciting, but need a measure of support, need to find a way to push this forward. And really the whole objective is to try and lessen our footprint on a global basis. As I've talked about earlier on, it's a real, we in the resource extraction industry have an incredible opportunity right now. I think there's been a broader societal acceptance of the need for critical minerals than I've seen in my career, my entire career. So we need to find a way to deliver it better than we have in the past. And we have to find ways to do that. Now, Wheaton has a very active program in terms of providing that support. We have a technical ambassador program to try and help our partners be as efficient and effective as possible to try and find ways for improvement. We have an overlying mantra in our company: the stronger our partners are, the stronger we are. So we owe it to our partners to try and do everything we can to help them be strong and healthy and find ways to do it for lower costs, which ultimately means lower consumption of whatever you need to produce it, more efficiently, higher recovery rates, all of the above, to try and improve and lessen our footprint for the same product in the end that society needs. The challenge is that we don't have, we've got a decent portfolio of partners. The Future of Mining Challenge is really about recognizing that we are part of a broader industry. And so this is nothing that's related specifically to our partners. I do hope that the successful technologies that we support through the Future of Mining Challenge will ultimately be used by our partners, but also all other companies out there. It's a way to sort of highlight some of the new technologies and hopefully get them out to help improve what we do as an industry and what we deliver to society as responsible resource extraction and producers. And so it's one of the key things that we want to unlock with this Future of Mining Challenge. I have to tell you, we had the first kickoff meeting and had well over 100 entities dialed in. I'm incredibly excited about what we're going to be looking at and studying over the next few months, and of course announcing the winner. It's $1 million, and it's an award. It's a gift. There's no obligations. We have obviously hoped that it goes towards advancing the technology and moving it into operations, but there is no limits on it. It is truly a recognition for efforts in times past in terms of bringing this new technology forward. We, of course, will be doing our best to flag that technology, and then we'll start the whole process over. This is an annual event that we're going to be doing at the PDAC, and I think it's something that will ultimately help the industry, even more than what we have today.
Okay, well, I'll certainly look forward to seeing the results of that in this coming March. I think we can wrap it up there unless you had any final thoughts that you would leave investors with.
It's an incredible time to be moving into the precious metal space. Obviously, as the president and CEO of Wheaton, the streaming model from a generalist perspective is an excellent way to come into the space. It's a very low risk way of investing into the precious metal space. We don't have cost exposure, and that is a huge advantage over traditional mining investment. That being said, I think there's a space in everyone's portfolio for a bit of exposure all the way from bullion down to the mining side. But streaming companies and obviously biased Wheaton should be a core part of the of that precious metals exposure that everyone needs in their portfolios.
Okay, well, really good to check in with you. I'm sure we'll have you back soon in the future. Thank you for being here today to go over gold, silver, and Wheaton precious metals.
Charlotte, always a pleasure. Thank you.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Randy Smallwood with Wheaton Precious Metals. Thank you for watching. If you like this video, make sure to hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.